What's going on, everybody? Welcome back to the channel. Today was another perfect trading day for me personally. All right, I woke up on time, got to my charts, did about 10 minutes of analysis, entered the trade, exited the trade less than 2 minutes later, locked in 2% on the challenge account, and shut the screens off. I had to take my daughter to the doctor, so I was able to get that done and take her out to lunch and then drop her off at school and just enjoy the rest of my day without even having to think about trading or look at charts. I was done by today by 8:40 my local time. Okay, I was done and out of the market. That's exactly how I like to do it, right? Especially trading on the funded account, because there are rules that govern essentially the way you can trade on the funded account, all right? And I happen to think that those rules are there for your benefit, okay? A lot of people think that the prop firms are trying to set you up for failure, but I think that the rules are there for the benefit of both parties, okay? So some of the rules with the prop firm, there are drawdown limits, okay? So if you have, for example, a $1,000 account, you have a profit target of 10% and a total drawdown limit of 10%, okay? You also may have a daily drawdown limit. So you can, in total, you can lose 10% of the account and then you lose the account. But if you lose 5% in one day, then you can lose the account, all right? Even if you're still in profit on the account overall, okay? If you hit that 5% daily drawdown, you lose the account. And there are different types of drawdowns. The one that I am using right now is called a trailing drawdown, and it is equity-based. So what that means is, for example, if you enter a trade here, remember we have a 5% loss limit. So maybe that's like up here or something like that. Okay. Now when you enter a trade and it goes in your favor, okay, and now you're down here. This is whether you have the trade open or close, it's going to only measure the highest amount of profit, okay, that you were at. It's equity based, right? And this trailing drawdown will move from here down to here, all right? And so if you were in this trade and you did not take your profit and it pulled back all the way up here and hit your 5% drawdown limit on the day, you're going to lose the account, right? So it's important when you're trading with a prop firm to take your profits off the table, okay, in a consistent and safe way, just to make sure things go as smoothly as possible. Because these rules, not only can you fail the challenge, but they also have a consistency rule, which manages your profits rather than your losses. And what that means is that usually what the consistency rule states is that no single trading day can be equal to or greater than 30% of your total profit. So if you're on a $1,000 account, you have a 10% profit target, which is $100. No single day that you trade can be greater than $30, okay? Because that's the 30% or 3% of your total account balance, okay? That's why I aim for 2% and take my money off the table at 2% no matter what, all right? And I shut the screens down. So if you exceed that consistency rule limitation, you won't fail the account and lose the account, but what will happen is that your initial profit target will be increased to a point that will ensure that your best trading day is less than 30% of your overall profit target. All right? So I'm not that good at explaining this stuff. I hope that makes sense for you. I'm just trying to give you that rundown real quick so you can understand why I'm trading the way that I'm trading, okay? And remember, this is not financial advice. I'm not telling you to buy anything or to sell anything. I'm simply showing you something that works for me. This is how I've been trading and locking in consistent profits. You understand? Like, at this point, I have complete faith that it already has, but it's going to continue to change my life for the better, okay? By sticking to these strict rules, all right? I'm easily locking in 2% each trading day. And what I mean by that is each day I decide to trade, I am locking in a solid 1 or 2% every single time, all right? That's amazing for me. That's all I need to be satisfied, okay? And to trade like this really requires a complete and total absence of FOMO, or the fear of missing out, all right? You cannot be worried about, you can't get greedy with this. You need to take the safe money. A lot of traders think that you have to make money in the market by catching this entire price leg and doing it like perfectly, okay? Like if you pulled your profits out right here, you would be dissatisfied because you missed this move, okay? The way I'm trading, you cannot have any of that kind of thought process going into it at all. You understand what I'm saying? You can't be worried about missing this move over here if you took profits over here. Just take your profits and be satisfied, okay? Don't get greedy. Every time I get greedy, I'm going to end up giving money back. And that's what I'm avoiding by taking one good trade, locking it in, and shutting the screen off, all right? So when I did my analysis here on this chart last night, I noticed, okay, we have 2 days, Thursday, Friday, that broke out of the low of the day boundary, all right? So we have day 2 shorts in the market here on Friday. So here I might be expecting to see day 3 shorts in the market, all right, which we did eventually get that. But when I came to my charts last night, we were right here. I couldn't see any of this over here. We were right here. And when I came before the session, I could see all of this. And so what I was expecting was a price spike at the open, either to the high to take out these levels from the previous day's New York session to trade back up into this downward move from Friday and then continue that move down. Or I was expecting to see a price spike down to take out the low for the reversal to the upside, all right? And I'm still going to be watching this market tomorrow very closely. But so when I saw what I needed to see this morning at the open, right? We were trading, this here is the 9:30 open. This candle right here on this gray line, that's the 9:30 open. We spike up through that high right there, and then we go up here and you can see that M. We have the 1, 2, 3 push pattern into that high of the day. We get our M formation, the engulfment, right? Taking all of these traders that are now trapped on the wrong side of this trade to the other side. I entered this trade, I believe, somewhere in here, all right? And I exited this trade somewhere around here and locked in my 2% and shut off the screen, all right? And here is the recording of the trade. And until next time, I hope you continue to free your mind.